The decision of the US Federal Reserve, Fed, to leave interest rates unchanged might impact the Indian stock exchange. Capital flows. Changes in US interest rates can impact the flow of capital to and from emerging markets like India. When the Fed keeps interest rates low, investors may be more inclined to seek higher returns in emerging markets, including India's stock exchange. This increased demand for Indian stocks could potentially drive up prices. Currency exchange rates. Lower interest rates in the US may weaken the value of the US dollar relative to other currencies, including the Indian rupee. A weaker dollar can make Indian exports more competitive and boost the profitability of Indian companies, which could positively impact the stock market. Global investor sentiment. The decisions of major central banks, such as the US Fed, often have global implications for investor sentiment. If the Fed's decision to maintain interest rates is seen as a positive signal for the global economy, it could lead to increased investor confidence in emerging markets like India, potentially benefiting the stock exchange. Inflation concerns. While the Fed's decision to keep interest rates unchanged may indicate confidence in the US economy, it's essential to consider the underlying reasons for the decision. If the Fed is concerned about rising inflation, it could lead to potential volatility in global markets, including India. Inflation can erode the value of assets, including stocks, and lead to market uncertainty. It's important to note that various factors, both domestic and international, influence the performance of the Indian stock exchange. The impact of the Fed's interest rate decision on the Indian stock exchange will depend on how these factors interact and evolve over time.